Hey traders, welcome to another episode of Charts and Coffee. Hope everyone's doing great. Happy Tuesday, everyone. All right, so let's get into it. Oh, what are we rocking here today? I got back into a company called Java Press. I manually grind the coffee, and they've got one called Extra Mile. It's kind of light, but it's super nice. So rock all Java Press Extra Mile, hand ground. So that's always kind of fun. A little workout in the morning. All right, so let's get to it. Good morning. Good morning. Great to see everybody. Let's get to it. So right off the bat, hey there, my friend James. All right, question about LLY. We'll also talk a little bit about retail sales. I received a couple texts about that one. And by the way, gang, don't sweat the retail. Here's the punchline. Don't sweat the retail sales numbers because we've got the stimulus checks going out, and any assumption that the retail sales were not good are going to be offset by the anticipation that the stimulus checks are going to kick that back up into gear. So I think the market's going to mostly ignore that. Okay. All right. So LLY, if we wanted to jump into this, right. So two things about LLY. Now, this goes right to the heart of what we do over at Sector Secrets. So thanks for the question, James. I love the way this really does highlight if you don't like the sector, right? This is kind of wishy-washy. It's not strong, it's not weak, it's just choppy distribution in a range. If you don't like the sector, you want to be even more discerning about the underlying stocks, the heavily weighted stocks within it. So in this case, as you'll see with Lilly, it gapped down. It's sitting at a really nice support level. Okay. So while I would not call this a high, if you're thinking of volume, the kind of volume that I use that sort of juts from the hard right edge of the chart, think of them. We kind of use the Alex Henold, climbing the mountain. Is this really a good foothold to be able to climb up from? And it's not bad. James, if you want to jump into Lilly, is it a bad one? No, I would wait, as you said, for an inside day or a minor low. I'm with you there. And you really want to see it stay in here because, again, imagine you're climbing the mountain. When's the next foothold that you're going to see? And let me grab my drawing tool here just to highlight it for those of you where it may not be popping out really obviously. But, this is the kind of thing that we look at when I'm setting up a trade in Sector Secrets, when I'm setting up a day trade in the futures room. I'm looking at these volume levels. That's all. This is sub-market. This is sub-market sonar, right? The surface is price. What's happening under the surface? So yes, James, I'm with you on that. Although I'm with you in terms of your idea of the inside day, I would probably pass on Lilly myself, but keep a tight stop. Look at where the volume and the lows are, and I think you're in good shape there. So great question to kick off the morning. All right, so next up is Mike. You talking my language. Love the currencies. Gang, there is nothing that money, currencies, and commodities don't affect. The things that we use to make the things that we buy with the money that we have, right? Commodities, currencies. And so everything else, I think, would fall under that. So knowing what the dollar is doing, that's a big deal. We had a really nice technical bounce, as you can see from here. Cool. That's a 200. By the way, this is the 200 exponential moving average that I use simple propulsion for. So if you were to have a 200 EMA, this is where it would be. When we use propulsion, it's a self-correcting exponential moving average that also combines moving average crosses. So you get a lot of cool things combined in that propulsion, but the base of it, the root of it is an exponential moving average. So yeah, I really like that 60s bounce because that's going to bode really well for continuation and things like the British pound and the Canadian dollar, which have better trends against that dollar weakness, that US dollar weakness that I want to take advantage of. So if it's moving lower, today, intraday, that might be a reality on a 15, or maybe, 1 hour chart. And that would, of course, highlight US dollar strength. But overall, I don't mind an 8:30 reaction to data when overall we've got a smoother trend on the daily of the pound and the loonie. All right. So thanks for bringing some currencies into the morning. I appreciate that. All right. Next up is send some of that Java to San Diego. Hey there, Steve. How are you? Yeah, there's a lot of coffee things that a lot of coffee companies I definitely want to try. Thanks for the recommendation there, William. I appreciate that. All right, so let's see. What do I think about Coca-Cola? So Coke. Let me do something here with you. So great question, Jordan. Let's do a little reverse search. All right. This is, again, when you're building a watch list, and 90% of what I do in my personal trading that then flows into Sector Secrets is what I spend most of my time looking for what I want to trade, not how. What you trade, and I've said this before, what you trade is actually more important than how you trade it. If you find a market that's in a good trend, if you end up find a market that has a clear path of least resistance, how you trade it, as long as you're not being a contrarian, you're probably going to be fine. In a trend, dip buyers like myself do fine. Breakout traders do fine. Traders who just get in because it was mentioned on television do fine, because trends really increase your margin of error. In non-trending markets, you don't have that luxury. That being said, what you trade is far more important than how you trade it. So if I look at Coke, of course, I think a lot of you probably already know, okay, Rag, this is an XLP conversation. Do we like, going back to James' question, do we like staples? And I can't say that I love staples. Are there relative outperformers within XLP? So this actually goes into a little bit different a conversation. It's not for me a trade. This would be, it's really interesting. I juxtapose the investing portfolio part of my life, which I almost exclusively do after 4 p.m. So people go, Rog, when do you look at your investments and your portfolios? That has nothing to do with trading, right? But I do that after 4 p.m. I do that after the markets close. This would be a conversation. Jordan, if we were doing capital and coffee, we would have a conversation about staples, because my investment portfolio is looking at what's not moving higher right now. My investment portfolio is not chasing energies and financials higher. It's almost looking at where the market's zigging, then I kind of want to zag. This would fall into that situation. So yeah, you can crack open the XLP and see if you can't find some relative outperformers for a trade. But the main interest that I have in XLP personally is really my longer term portfolio. How can I look at the Costco's and the Colgate Palmolives? How can I look at the Cokes and the Procter & Gamble's, Pepsi's, Walmart's, paying careful attention to the higher dividend yielding names, which might have gotten hammered with the way in which the bond yield for the 10-year crossed over 1.4, 1.5, 1.6, and start to think and in many ways front run the macro cycle. So a little bit different there. I'm not looking at Coke right now. Yeah, I'm just not looking at Coke. If you want to enter a small position, my advice would be have a longer time horizon. Okay, have a longer time horizon, and you can take a look at other goods. Maybe instead of XLP for your trades, focusing on some XLY names. Again, that would be the trader in me having this conversation with you, Jordan. So thanks for the question. Gene, FCX. Oh gosh, FCX. If I think of anything that we've been in and out of most in Sector Secrets, it's FCX. Why? It kind of goes back, Gene, to the question that Jordan had in the conversation there, and that is macroeconomically, where are we? Dr. Copper, as they call it. You didn't know that Copper had a PhD. Dr. Copper, I know, is stalling out a little bit, and that's going to affect the stock proxy, the relationship between copper and Freeport-McMoRan. However, macroeconomically, I don't want to bet against copper. Trends can take a breather. If you've been sprinting down the field, there might come a moment where you're just going to have your hands on your knees and you're going to catch your breath. That is okay. Consolidation, a little congestion within the context of an overall path of least resistance going higher, no problem. So I will just be patient with my FCX, which is another reason why when we do buy options, we always look for minimum 45, maybe 60 days to expiration so I can play that longer term trend, especially when the name that I'm looking at, whether it's playing a name related to uranium with CCJ, whether it's playing a name related to copper like FCX, both of which are positions in sector secrets, this is what I'm talking about. Will Freeport-McMoRan go parabolic again? Probably. It may not be tomorrow. I'd like it to be before my option enters 21 days to expiration, but this is what we're looking for. This is the kind of position that we take and look to capitalize on those bigger picture narratives. So FCX would definitely be part of that, Gene. It's probably one of my favorite symbols for months now. So thanks for the question. Snap. Okay, so Snap comes back to, let's start with structure. Let's start with also where does Snap have weighting. Gang, again, I don't say this to in any way insinuate this is the only way to do it. But this is the only way that I think, for me, for the way that I trade, is the only way that I know works for me. And that is you spend most of your time looking at the watch list. Watch list building means, what is one stock related to? What overall group is it lumped into? So when I look at something like Snap and I do that reverse search and I start looking at some of these names, ARC-F pops up. I mean, anything ARC is going to grab our attention. But, even before I start getting to that layer, just looking at the chart, we do have earnings coming up. So maybe if you look at the history of earnings on Snap, and you could do that very simply by jumping over to Estimize and looking at the previous earnings releases and looking at company guidance. I can't remember if the company guides in this one, but you can do a little bit of that. So you look at, okay, Wall Street consensus, Estimize consensus, they beat. Wall Street consensus, Estimize more or less in line. So I wouldn't call this one that a name that consistently just crushes earnings. No, not in any way. This is Estimize looking at the history of earnings, and this is the best whisper number service that I know of. I would not trade anything going into earnings without consulting some of the data from Estimize. Having said that, where we are right now in Snap, I don't love the structure. I don't want to be short. I mean, you look at the history of the trend, look at all the green, right? I don't want to be short, but the timing to frankly get into Snap was probably a reversion to the mean. So getting in now, to me, for my tools, is a little late. This is a little late. You really want that to overlap with this area here, right? So reverting to the mean would be, to me, an oversold buy, because this is no longer an uptrend. So long is fine. Just be cautious, because in this case, Snap's already moved higher. If you're buying calls, you're going to pay up, right? Because everybody sees the market moving up, and the folks who are selling the options, they're going to charge more, right? Supply and demand. So be careful on that one, Gene. Yes, it's bullish, but I'd be careful. And yeah, thank you so much. Yes, if you want to join the mastery, it's simpletrading.com/sector. We just did our weekly get together, our weekly Q&A in tech yesterday. So Mondays into the close, every Monday I'm with you guys to answer questions about my indicators, settings, our watch list Q&A, things like that. So absolutely, join our growing think tank over there in the mastery. All right. So next up is Roger D. Good morning, fellow Javaholic. Love it. Could I please explain what the clearing range is that you were referring to yesterday when looking at the NQ? Oh, okay. Sure. So, well, you know what? I've got the beginnings of the notes that I'm going to be sharing in the futures room when the bell rings in about 14 minutes, and I'll be in that room in about 4. So what is the clearing range? I'm going to put this in the notes. So the clearing range is the high and low that is established. Let's go to a 1-minute chart. And you mentioned the NQ. The NQ was our only day trade. Many of you who watch me in the futures room will know that I don't believe in super active in out trading. I actually find it's the surest path to making your broker rich and not you. If you look at the way that I trade, I look for 5 pitches, right? The 5 pitches we want to swing our bat at. So here is yesterday. All right, here's yesterday. There's your clearing, by the way. High and low range established between 9:30 and 10. First 30 minutes of the morning are known as the clearing or opening range. Call it whatever you'd like. I don't get hung up on the nicknames we give things. But clearing and opening are if you were to say that to a group of traders, they would say, you mean 9:30 to 10 a.m. Eastern. So then the one that I was looking, what was our trade yesterday? Sure. So I had one trade yesterday, right? We took out 30 and 50 points out of the NAS. What did we do? We waited for the breach, waited for the market to retreat. It's a good old fashioned breach retreat. When this happens up in here, by the way, gang, I'm already sending out an alert, or I'm putting it in the notes, because here's the thing. I detest buy now, sell now, market order trades. You guys can't follow that. There's no way. It also is twitchy trading. What we want to do is say, look, once this happens, what has it set up? It's set up this area. It's set up this area. It's set up that area. There's a lot that it's set up. So we send out the alert using limit orders. Okay. And those limit orders then they're parked in the market and they wait for the price to come down and tag them. You've got 2 opportunities by having these very proactive alerts. You can calculate what your risk is. What happens if you're wrong? What happens if the market goes down and breaks the support level down in here? Can I afford to be wrong? That's the main question about any stop loss that you place. Also, in terms of where you want to position yourself, where you want to put your limit order in, actually taking the physical time to type in that limit order, which only takes moments, you need that time. So that's really it. The clearing range breach gives me the ability to be much more proactive about getting my order put in, getting the order set up for everyone watching to see. And then we had a zone. It hit 2 out of 3 levels within the zone and then went up to our target. And then, basically by about 11:15 was done for the day. I put a trailing stop in, put a break-even stop in, either one you can do, and then you call it a day, knowing that you've locked in a certain percentage of profits on your open position. You're open to the fact that maybe we grind higher, we make higher highs, and if we don't, like yesterday didn't, we're not attached to a narrative that goes past 11:30, and that's actually exactly what we did in the live session that was streamed yesterday. So thanks for the question, Roger. I hope that makes sense. That was the setup. And I'm trying to remember. No, I did not cover that in the free video. I did that in the premium. The free video, I talked about crude oil. But that's the setup. And that's one of the five setups, one of the 5 pitches. So thank you so much for that question. All right. So gang, just like that, we are out of time. But real quick, Dollar Canada, I love it, Mark. Very cool. Grabbing 10 pips, getting in, getting out. Super smart. One of my thoughts are getting more aggressive when trading double green stocks in a double green ETF. Chris, here's what I would say. If it's parabolic, maybe yes. If it's not, I'll still wait for a pullback. So aggressive to me is going to mean 2 things: larger position size, and am I going to get more aggressive about how little of a pullback that I would need? So larger position size, am I going to get more aggressive on the pullbacks that I need? So I hope that makes sense. It could be an 8 EMA or 13 EMA as opposed to a 34 or a VWAP. So that's what I would say I would focus on in that regard. All right, gang, have a great one. I'll see you tomorrow, same time, same station. Come check out what we're doing over at simpletrading.com/sector, or join me in the futures room. All right. Be good to each other, gang. I'll talk with you soon.